Hey, this is Justin with DayTradeTheMarkets.com on Friday, December 7th, and had someone ask me about the Nasdaq today and if I could kind of go do a replay for him so he could see how it looks on the Nasdaq. We normally look at the emini S&P when we look at index futures, but it works the same in terms of the logic. So I thought I would do a replay of the Nasdaq for him and just kind of talk about it and include everyone here on the list on this, as you could probably get some information on how this works. I'm going to do a 1 minute chart, but this same logic and trading concepts and decision-making concepts would apply to any time frame. So with that said, let's get to it. What I like to do is look at what happens in the overnight session, and I brought up an overnight chart here. I'm on the East Coast, so you can see that around 2:30 or so in the morning, we get our first decent structure of the overnight, selling us some sellings coming in, and then some extreme selling comes in here around 3:30. So the filter turns over. We've got a resistance zone, and one thing I wanted to point out. I want to mainly look at the news here later on, but one thing I wanted to point out about this is that we have made some adjustments to our settings. We have an overnight setting now that's we changed the sensitivities and so forth. So what's nice is if you do like to trade the overnight, or if you can't trade during the regular trading hours in the U.S., this is actually, the overnight has become tradable. So it's kind of neat. The same logic applies to that we would use in the daytime. It's just a little bit slower, but certainly it is now tradable in terms of how this software looks at the market. So we've got that. But then when the employment news came here, we obviously had some extreme buying aggression come into the market. So that tells us that we're going to have a gap up when we start the day. We want to kind of monitor this area around 26, 72, 73, the overnight high, to see, can we bust through that level and have a potential explosion type of a gap and have a big move higher, or are we likely to fill the gap? Now let me flip it over to the 1 minute chart here and get the replay going. But one of the things, if you like to trade gaps, one of the things that I like to say is, rather than just blindly getting in when there's a gap, wait for some kind of evidence, some kind of confirming evidence to help you make a decision as to when to jump on a gap, so you don't get kind of swept away if it goes against you. And the way that I would certainly think about that in terms of a gap is, well, you could wait for a confirmation of a deceleration. You could wait for a buying aggression bar to get rejected. You could wait for a selling aggression bar to form. Anything that's just going to increase your edge slightly on that gap fill type of a trade is certainly worth the while, because if you can just increase your edge slightly over the course of a year of gap fills, it's going to drastically increase your profitability, obviously. So with that said, we know we're going to gap up. We want to see, can we bust through this 23 area here, or do we have some evidence that might lend us to think that this gap is likely to fill? Something that we would want to think about. So here we've opened, and I'm going to speed it up just a hair here. Now we've got a deceleration bar here, so if this low is taken out, that might be a pretty good signal to get in and fill this gap. Instead, the high was taken out. We've got a level 1 aggression bar. Don't pay too much attention to the level 1s, but it's something. If you're playing the gap fill, it's something you can look at. We did not get a full bar above it. Can we get a full bar below it? That might be considered some kind of a rejection of this level 1 bar, which gives us even a minimal increase of our edge on a gap fill, and that can make a big difference. So we've had a full bar below. Might tell us that makes sense to get on board if you do like trading gaps. I don't necessarily focus too much on gap fills myself, but I know a lot of people do. Now here's a level 1 selling bar that's come in. And again, generally speaking, you don't want to pay too much attention to level 1 bars, but on something like a gap fill, if you can just find a minimal way to increase your edge, it's certainly going to help. But generally speaking, and if you've seen any of the videos I've done earlier this week, I talk a bit about waiting for the first major structure and seeing what happens on that first major structure, because that's going to give us a pretty good handle whether that first major structure has follow through or rejection as to which side's in control of the market, at least short term. So Again, at this point, we're roughly a half an hour into the session. We have filled our gap. At this point, nothing really major has happened other than that gap has been filled. The overnight high is still in place, but nothing major has happened. So we just kind of, at least the way that I look at it, is we just kind of keep sitting on our hands and wait for something major to happen. Once something major happens, then we can take action. So at this point, we're a good half an hour into the session. Not much has happened. I'll just let this run out until we have something major happens, and then I'll pause it and talk about it then. But at this point so far, we've just had some mainly selling structure on level ones, but it's not something that you want to take to the bank on a level one. Level one's good information. It's not necessarily it's good information. It can help you stay into a winning trade or get out of a trade a little bit earlier, but it's not something that you want to put too much stock in on level ones. Even this back and forth on level ones, interesting, but nothing major to this point. Excuse me. So again, at this point, it's just some back and forth. Nothing really exciting has happened. Now, to be fair, if you're looking at like on a 5-minute chart earlier in this day, we had some pretty strong aggression come in on the 5-minute chart. So you do have some evidence telling you that there might be some selling coming into the market, but that's assuming you're looking at other time frames. I'm just going to assume we're looking at this 1-minute time frame. Let me pause it here. Now at this point we've made new lows and we have our first major structure. It is this we had this level 2 bar, but also this a high velocity move made by sellers. That's a pretty major structure, and so we want to ask ourselves, are we going to get follow through or rejection? That's going to be a pretty good indication as to the likely, at least short-term direction of the market. Another thing with that is, if you are at least relatively comfortable on the short side in this case, we have pretty good edge or pretty good probability that the high of this high velocity move is going to act as resistance. And so one of the trade types that we talk about is what we call the high velocity move retracement trade, which at this point in time, if you wanted to take that trade, you would simply put a limit order in toward the high of this high velocity move, probably somewhere around 26.47 or so. Okay. So we'll let this run out a little bit more here, but that's probably one thing you would be thinking about doing at that point. Now you can also see that, let me pause it, our filter has just turned red. Normally you'd be looking at this on the right edge, and I can do that if you want. You can see that the filter has just turned red, so that's another piece of evidence that's telling us, it's confirming that the order flow that's coming into the market is relatively bearish, or very bearish at this point. And so any longs you're thinking about, you'd want to think twice about, and any shorts you're thinking about, for example, this high velocity move retracement trade, that's just giving it a little bit more confirming evidence. Hopefully that makes sense. So we'll let this run out a little bit more here. Again, some level. Okay, so let me pause it here again. And now here's our first support resistance zone of the day. Okay, so we have our first resistance zone that's come into play. It happens to coincide with that idea of getting short here toward the high of this high velocity move. Our filter is red. So certainly, if you were thinking about that high velocity move retracement, it's just gotten confirming evidence in the form of the filter and the form of the resistance zone that's formed. So certainly would make some pretty good sense. It's a pretty high probability trade. There's a lot of evidence that's lining up right in that area. Now, if you wanted even more evidence, you could wait until the market, if and when the market got up there, and we have some, even a level 1 or a level 2 selling aggression bar that comes in? Do we have the rejection of a buying aggression bar? Do we have a deceleration? If you're looking for even more confirmation, you can certainly do that. At this point, I would feel pretty safe placing, just leaving a limit order in there toward, the high of this high velocity move. So we'll play this out a little bit more. And you can see, we're just kind of meandering in that area for now. We've got some level 1 buys, which again, it's interesting, but nothing major. So now we've tested that. If you have the limit order, you're certainly filled. There's a deceleration. If you're looking for confirmation, you probably could use that as confirmation as well. And now the market's starting to sell off a bit there. Now, this yellow zone here would normally be green, but in this case it's yellow because it's what we call a caution zone. It's telling us that kind of like a yellow light on a stop sign or on a traffic light. It's saying this area could be support, but there's a lot of weight on the market, so our expectation is that this is going to get pierced, and that's what happens. Happens on some strong aggression, and so. At this point, hopefully you're short from up here. You would want to at least put a stop. Let me go ahead and pause this. You would want to at least, if you were short from in this area, when you get some major structure like this, you'd probably want to bring your stop down a few points above that. So every time there's another major structure, a few points above that. And so that's kind of the idea for locking in some profit. Obviously, if you get here's a deceleration, that might be another place where you, on the low of the day, where you might want to consider getting out. It's showing us that the level of selling aggression has decreased, certainly, if you're really looking to try to maximize as much as you can on a short-term type of trade. But you can also see now that another support resistance zone has formed. Our filter is still red, so getting short in this area certainly makes decent sense as well if you're not already short from here. Hopefully that makes sense. So we'll let that play out a bit. So now we're testing up in that area. You can see had a deceleration. Here now you can see that the support resistance just shifted a little bit. So there actually has been a major buying structure that's come in, which is this high velocity move. So it doesn't necessarily mean you should get long, but it's giving you a bit of a warning sign that we would at least expect the low of this high velocity move to act as support, and it just happens that we also have a support zone there as well. So we're against the filter, we're against any other major structure, so it's not necessarily a signal to get long in this area, but it is something that you want to consider. If you are short, consider what happens at that area in terms of getting out of your trade, or at least be careful about getting short into that zone. Hopefully that makes sense. Again, we're just looking at each of these pieces as a piece of evidence to help you make a little bit better decision than you might have done so without. It's not magic. It's nothing. It's not every zone is going to hold every time. You're just trying to take the cumulative effect of all of these various pieces of evidence to help you make a better decision. So at this point our filter's still red. There's no reason to think about getting long, but there is at least potential that this area here, right where we're testing now, could act as some support. And if we pierce through this with some strong aggression, then my thinking is we're off to the races on the downside. That's not happened at this point, but that would be the logic I'm thinking at this point, in that we would have our first attempt by buyers, which was right here. And if that low can't hold, that means the buyers were beaten down at this point in time. We're going to have another wave of selling. Okay, so you can kind of look at it as a battle between bulls and bears all day long, and trying to stay on the right side of that, or at least avoid getting into bad trades. Instead of trying to be all over the market minute by minute. So again, until this support zone can get pierced, you've got to be thinking that the buyers are at least trying to mount a charge. Now it looks like we're heading below this. Here is some. Let me go ahead and pause it. Here is some evidence that this buying structure, the first attempt by the buyers, you can see we tested the high, we tested the low, tested the high, tested the low, we broke out lower. Okay, so this first attempt by the buyers, we couldn't break out higher. Instead, we broke out lower. That's telling us, at least in the short term, sellers are in control. And so again, you've got another scenario here where filters red. All of our structure so far has been basically won. I say that in quotes. It's been won by the bears. Here's a resistance area that is now formed. So, looking to get short in this area certainly makes some sense. Whether you just want to blindly get short there or wait for some kind of confirmation certainly would be the thinking at this point. So let's let this run forward a bit as well, some more. Another thing would be if we're testing the new lows again. We have an idea we call the breakout trade as well, where you can see that the bears are pretty well in control of the market at this time. If we were to break out or make new lows on an extreme selling aggression, like a level 3 selling aggression bar, that's something that you can consider just hopping right on board market order short, because it's showing us we're making new lows. This thing's not going to retrace. This thing's just taken off. That's the breakout trade idea. But that didn't happen here on these lows. So that's another, you can avoid getting into false breakouts as well with these aggression tools. I think that's pretty helpful. So here we're testing into this resistance zone, had a deceleration. That's something. Here's another attempt by buyers. So it would be interesting to see if this low can hold. Right now everything's telling us bears are in control, but if this low can hold and we can take out this high of this high velocity move, well, that's at least telling us in the short term there's a little bit more equilibrium in the market. Okay, and that's not happening. So at this point, bears are still in control. And obviously this area did end up working as a nice area to be looking for a short trade in this red zone. Red filter still, so no reason to be thinking about getting long. You just want to try to be thinking about where you might want to be getting short at this point. So if you took a trade off of this one, at this point we've taken out some of these selling bars, so you're probably out of that trade, or else you're getting break even here on this part. And oftentimes you'll wonder, do I want to get short a second time or get long a second time off of a support resistance zone? Certainly you can, and if there's good confirming evidence to do so, that makes sense. Obviously the first time is a little bit more probable than the second. The second's a little bit more likely than the third, and so forth. So just something to monitor. But at this point, until we would be able to take out this upper band, you've got to still be, or until there's some major buying aggression that comes into the market, you've got to at least be thinking that the bears are in control. So the video is getting a bit long here, but let me speed that up even more here. But that's basically the thinking. At this point is, can these two resistance zones hold? If so, bears are in control, or is there some major buying event that comes in that allows us to take out this resistance zone at the 26.43 area, or is there some major selling event, some strong to extreme selling aggression that comes in that makes us think we're going to be making, having another major run lower? At this point, that's kind of the thought process. The way that I like to think about trading is kind of when I was playing, Little League baseball as a kid and playing the infield. The coaches would tell us, okay, what before each pitch, prepare, know what you're thinking. If the ball's hit to me, what am I going to do in this situation? And that's the idea that I like to think about in trading as well. Okay, what am I going to do if this happens? What am I going to do if something else happens? And so I like to go through scenarios in my mind of what's going to happen. And at this point, either you're still short or you're neutral at this time. You're probably not long. There's no reason to be getting long at this point. There probably wouldn't be any reason to get long until either some major buying came into the market or this level is taken out up here, or if we have another major selling aggression move on the downside, that might be another reason to get on board. So at this point, it's 2:30 in the afternoon on a Friday. Can get a little tricky. Okay, so here's a major selling event. We know we're not making new lows anytime soon. We want to see if we can take out this resistance zone, and you can see another resistance and support zone changed. Our filter has changed, so we're not as dominated by bears. Definitely a neutral market at this point. You're going to wait for, at this point, can support hold? Can we take out that 2644 area? At least that's what I'm thinking before getting long. I mean, you certainly could get long in this area. It's a little bit more risky. The filter's not with you, but it's not terrible. You can see we bounced a couple points there. Now it's 3 o'clock on a Friday afternoon. Buyer beware, so to speak, at this point. Filter's back to red. So there is some order flow coming into the market here on the downside. So you can see the resistance just changed there. It's now resistance is at 2642. It happened just before we tested that area. So it's late in the day. I don't recommend trading this late in the day, but generally on a normal day or a normal time of day, getting short in this area would make some sense as well. So we'll let this play out till the end of the day. But I know I went through that. I know kind of quickly. Hopefully that made sense. I just wanted to kind of run through the thought process, at least the way that I think about it. But the idea here again is that you've got various pieces of evidence. You've got kind of unique evidence in that it's getting right to the heart of the real-time auction. It's talking about order flow and aggression, the things that really move the market. If you can get a handle on that, and when there's strong to extreme buying aggression, you've got an edge. You have a competitive advantage over other people in the marketplace. So that's the idea here. Hopefully that made sense. If it did not, by all means, send me an email, write me a question at info@DayTradeTheMarkets.com, and I can try to more fully explain this. But otherwise, have a great weekend, and we would obviously love to hear from you if you do have questions. Okay, talk to you soon. Thanks.